Hello everyone, my name is Sunday. I welcome you all to Against FX. Today we will be treating a topic that I titled How to Use Fibonacci Retracement Tool. To use fib retracement tool, right? So it's very, very important that you know how to use this tool, all right? If you are new, please do subscribe to my YouTube channel. And There's a crash course that is ongoing. It's going to last for a month. All right. I'm offering this for free because I know most people they're interested in learning how to trade, but they don't have uh, money to pay for course. So I just kind of deem it fit to offer this course free of charge. It's going to be 1 month, 1 month course. Every day there will be new videos. So all you need to know about trading, about forex trading as a beginner, I'm going to take you through step by step. All right. And if you have been watching my video up to this point, I will say congratulations. You are just working your way to on the top. All right. So you're just working your way to financial freedom. Right. Now, trading is not just maybe you just start trading today and start making big money. No, it takes, you know, step by step. What you are learning now, you need to master it. All right. You need to master it. And trading is all about patience. All right. It's all about patience. And one thing about trading is that it's going to make you bring yourself out. The way you react to things is going to show in your trading. How you are able to handle your emotions is going to show while trading. So by the time you start talking about treating the psychology, you will understand because trading a lot of emotion. So you need to master yourself. All right. And that is just how it is. And apart from that, like I said, please subscribe to my YouTube channel and share the video. So today we are going to be treating this topic, how to use Fibonacci retracement tool. Now, what is this Fibonacci retracement tool? Fibonacci retracement tool simply it's a tool that you use to gauge the retracement. All right, once you plot that Fibonacci retracement tool, you will now have an idea because you are just going to plot from, if it's a bullish trend, you are just going to plot from the lowest price to the highest price. All right, that is how you are going to plot it from 100 to 0. All right, then if once it start pulling back, the pullback should hold in any of the level. It could be 23, it could be 38, it could be 50, it could be 61, it could be 78, it could be 100. All right, so I'm just going to be showing you some few slides so that take notes. All right, so that you have something to write. It's very important because those are the things you'll be referring to as progress in your learning. All right. Now, I hope you guys can see my chart. Okay, so let me pull this from here. Now we have key Fibonacci retracement levels. All right. The levels are 0.0, that is 0.00%. We have 23.6%, 38.2%, 50%, 61.8%, 78.6%, and 100%. So automatically, like I said, is between 100 to 0 or 0 to 100. So that is how it is. And before I show you in practical, let us go through this. Like I told you, Fibonacci retracement tool, it's a tool that you need, all right, as the price is increasing, rising, it will get to a resistance level. By now, you should know what resistance is all about. Resistance is what? A level where sellers wait for price. As soon as price gets to that level, they will push the price down. While the support level is a level where buyers will wait for price. As price come to that level, they will push the price up. It's as simple as that. All right. Now, Fibonacci retracement tool simply is a tool that you use to gauge the market. If it's increasing, all right, if it's in a bullish trend, if it's a bullish market and price is increasing, once it gives you a new high, a new price or a new high, then that moment of relief as it's pushing backward, all right, as it's retracing, the only way you can gauge it is by using, there are other technical tools, but I tell you, Fibonacci retracement tool is widely used, all right? Now, what happens is when you now want to plot it, you start from 100 because it's a bullish trend. Start from 100, drag it and drop the 0.0 at the highest price. Then you start from the low price, all right, to the highest price. So that is how to plot it. I'm going to show you in a moment, but let me first of all explain to you guys. Now, 0.0%, that is just, the meaning is that start of the move, all right? Like this very point is always a kind of a reversal point, or where the price got to before it will now start to retrace. All right, if you move, once you move, one moment. Once it moves from 100% to 0%, where as you plot it, now that place, that 0.0, meaning that it's a start of the move. All right, that is a resistance level. It's a start of the move. Now, The interpretation is that no retracement yet at that level. Once the price is at that level, there is no retracement yet. Then by the time you now see price coming down to 23.6, as it start pushing below 0.0, that means the retracement has started. Now, the first level that the price will get to as it's retracing is 23.6%. That 23.6% is just like a shallow retracement. It's a shallow retracement, very brief. Maybe because when the momentum is high, that means there are so many buyers. Or, yes, because we are dealing with an uptrend now, there are so many buyers. So they are pushing the price. Even if you, at that point, at this 0.0%, you see price pulling back to 23.6%, is just a shallow retracement at that point. All right. The interpretation is that minor pullback, we regard it as what? A minor pullback trend likely to be strong. It's a strong trend. Let's just put it that way. All right. At this level, it's just a shallow retracement point because price can get to this point, found support, then it start pushing. It will now resume the underlying trend again and start going up. All right. So when it happens, because once price get to this point, a resistance level, this 0.0, as it's making its way back to this level, all right? And once it get to this level and it turn and it start going up, we just know, okay, this is just a continuation move. It's just a little pullback, a shallow retracement, and then it now continue going up. So this level is what we also regard as a continuation. All right, price will just come touch, tap it, and start going up again. So 38.2%, we now say the retracement is moderate. That means, yes, you will see it that, okay, this is a retracement. You will notice, okay, this is a retracement, and we call it the first major support or a resistance zone. If it's a bearish market, we'll not say, okay, a resistance zone. All right. If, as we are dealing with a bullish market, that means the first major support. All right. Once price get to 38.2, be expecting a reaction from there. But if the retracement is strong, it will break this level. So we started from here, zero. I'm going to show you guys, all right? So just calm, be patient so that you understand how it works. Price will get to this 0.0, then you now start pushing back to this level. It will get to 23.6, which is a shallow retracement. Then if it did not hold, that means it will now start pushing again to the downside. That means once price leave this level, is coming to this. This is the next level. That is 38.2%. And once price get to this point, we call it a moderate retracement because that is a first major support. All right, 38.2 is that level is very, very powerful and significant. All right, because why? Buyers are there, all right, waiting for the price to retrace to this level. So once it succeeded in breaking this level, then we are now saying 50%. 50.0%, that is a psychological number, not a true Fibonacci ratio, but it's widely used. It's a psychological number because this number is, let's say, it's just in between. this is the, um, let me just use the word red line, all right? Because this is what is a line that divides the premium level and the discount level, 50%. So there are so many buyers, so many traders that are watching out for this level. All right. As soon as price is pulling back, if he is able to break 38.2, then the 50%, we know that, okay, that one we is going to, there is every possibility that price should hold here at the psychological level. That is a 50%. But most time it does break past this level. And once it does, that means it will pull back to 61.8. All right, that 61.8 is a golden ratio. It's a Fibonacci golden ratio. And when that happens, when price pull all the way from this point to 61.8, we now say it's a strong reversal. And this zone, this level is a strong reversal zone, often watched closely by traders because it's a golden ratio. Once price is able to break through this place, this level is, in fact, is most watched because as soon as price get to this level, there is every tendency that it will reverse from here. Right? That is why we call it golden ratio. It's a Fibonacci golden ratio, 61.8. All right. Then the next one, if price breaks below this level, then the next one is 78.6. Once price break all this level and it now tap into this, we say this is a very deep retracement. It's a very deep retracement. Price may reverse sharply. What's going on? Once price get to this point, price may reverse sharply or break trend. All right, it might reverse sharply or break trend. So after this point, if price continue to pull to the downside, then we now say at 100.0%, we are simply saying this is a full retracement. That means the entire move has been undone. All right, simply means that, let's say for example, price 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 of an asset was at $100. It now rose to $300. All right, to this point 0.0. Then at the end of the day, it now started returning, reversing, going back, going back. It now returned back to uh, let's say that the asset rose from 100 to 300. So when you now go to this 300, you now reverse again, come back to 100. Do you understand? So once it happens like this, we say full retracement. That is, the entire move has been undone. And once it's able to break below this level, that means there's going to be a change of uh, direction. If it's going up before, that means it then means that it's going to change direction. All right. But we'll now say, okay, change of character or market shift. So these are the levels. There are other levels, but these are the ones that are most important. All right, because we are not talking about extension. The extension is just for you can use extension for your take profit to know where you are supposed to take your profit. But that one is not really important. as you can use your resistance point of reversal as to set your TP and all that. But you can also use that your Fibonacci extension to set your TP. How it is calculated, Fibonacci retracement to how it is calculated. To calculate Fibonacci retracement levels, you need two key price points. I've already said it. The high, that is the peak of the move, then the low, the bottom of the move, where the move started from. All right. Then you apply the Fibonacci percentages to the difference between the high and the low. The difference between the high and the low. All right. Before you can do any calculation, Fibonacci calculation, you need the high and the low. The low is where the price originated from. Then the high is now the highest price, where the price now got to, all right, at that point, before it now started reversing back. Let's say, for example, price is at 100, that is the low, that is the bottom of the move. Then you will now move, you will now rise to 300. Once you get to that 300, it will stop and it will start coming down again. So that point now, that 300 is a high. So before you can calculate and to calculate Fibonacci retracement levels, you need two key price points. So you need these two key price points. That is the high and the low. All right. Then example, in an uptrend that we are talking about, let's say a stock moves from $100 to $200, right? If an asset or a stock moves from $100 to $200, all right? Price range, that is what we call pricing. The price range now is between 100 to 200, right? Now, what is the difference? The difference is supposed to be 100, all right? The price range now is equals 200 minus $100, $200 minus $100. Now, don't be confused. We are not doing mathematics here. It's just the way it is calculated. So you just need to know it. All right? You just need to know it so that when somebody talks about Fibonacci retracement to, you have the knowledge. All right? You don't just pick two and start using it. You don't know what come about all those levels. That is what we are trying to teach you guys now. Let's say a stock move from $100 to $200. Now, there's what we call price range. That price range is between 100 to 200, right? Now, the price range is equals, this is how you derive it, $200 minus $100. That is, it now gives you $100. That is the price range. So let's go. Apply retracement level to this range. Now, if you now want to apply retracement level to this range, remember, from 100 to 200. Let's go back so that you understand. From 100 to 200, that is the price range. All right. Now, 23.6% level is equals $200 minus open bracket 0.236 times $100. All right. What will it give you? 176.40. All right. Now, we all know what board mass is all about. You first of all open the bracket. So what you need to do first is to times this. If you carry your calculator and say 0.23, one moment. We'll work it together so that you understand. Because you first of all open the bracket. You know what board mass, we all did mathematics, so you know what board mass is all about. You first of all open the bracket, you say 0.236 times 100. All right. What did you see? You see 23.6, right? Then you now say 200 minus 23.6. What do you get? 176.4. So if you like, add zero. So that zero doesn't mean anything. So you can see this is how we now derive 176.40. All right. We have applied this now, 23.6%. This is it. Then 38.2%, if you apply this, this is what you will get. Now, let's do it together again so that you will understand. That board mass now, you need to first of all multiply this one that is in a bracket. You say 0.382, all right, times 100. So if you are doubting, you don't know what come about the 100, you know what is our price range. When price move from 100 to, let's go back so that you see. This is it. From 100 to 200. Now the price range is 200 minus 100 is equals 100. That is why we are using this 100. That is a price range. All right. Or if you want to maybe say, okay, 200 to 300. The price range is 200. So you must have a price range. Why do we say price range? Price range now means from where the price originated from, that is the bottom, then the high, where the price got to, that is the top. That is, let's say, from 100 to 200. All right? Before you now start coming down. I hope you are making sense. It's very simple. You don't need to complicate things here. So when you multiply this, that means you have opened this bracket. The answer, this one now, you now say minus 200 minus the answer. It will give you this. The same thing applies to this, like this, and like this. That is how you can work this, they use the range to work out this level. Now note, these levels are plotted horizontally on a chart to help traders anticipate where price might bounce or revert. Because all these levels you see, there are levels, if in a bullish market, all these are support level. This one is a support level, this is a support level, this is a support level, like that, like that. But as at the time price get to this level, if you found support, if the momentum is strong, there will be a rejection here, then price will now start pushing price to the upside. If it breaks this level, once it get to this level, there will be a reaction. So if the level holds, then you will now see price pushing to the upside, like that, like that, like that. So that being said, let us now go to our chart so that, wow, this trade is really playing out, man. This is our TP here. It's going to get to this point. No Jupiter. No Jupiter. We are still holding, guys, so just keep holding. This is our target here, this level. Right? So when we say before you can apply Fibonacci retracement tool, you need the low of the price where the price originated from and the high of the price where the price got to before it started pulling back. And look at it. Let's remove this one here. All right, let's remove this one here. The price stopped here it got rejected and it started going, breaking structure to the upside. So this move now, the price originated from this level, and this is a high. We have the low and we have the high. So how do you now plot your Fibonacci retracement tool? All you need to do is bring it. This is a Fibonacci retracement tool, you can see. Fib retracement. So this is a Fibonacci retracement tool. You just click here, you click at that point, then drag it to this level. That is 000. Let's remove this one so that you guys you can see it. Then we remove all these things first. All right, for the sake of learning, so that you understand what we are doing. This is the low. If you look at it, this is the low, and this is the high. All right, so you drag, you plot, you click. Once you pick your tool, the Fibonacci tool, click here, then drag it to the high of the price. All right, at this point, price found resistance. All right, because it's bullish, it found resistance here. You can see the rejection. Then there is 0.00. This is where 0.00%. This is where price now started reversing. This is a pullback. Now, for you to now know where the pullback will now stop, the pullback, when you hear the word pullback or retracement, is the same thing. All right. In trading, we say pullback when the price that is going up starts to come back. That means decrease in price. A high price is now decreasing. All right. It's now decreasing. You understand? So for us to now ascertain, okay, to know where the decline of the price might get to before it starts going higher again. When that happens, we just need to plot our fib from the low to the high. Then we'll not spread it. And you see what happened. The price now started coming down, coming down, coming down, coming down. As it's coming down, it violated this level 23.60. All right, it broke this level, push again, breaking this 38.2. It now started pushing again. It got to 50%, this 50.00. Then, because this level is a psychological level are where traders are watching, and I want to believe that there are so many pending orders that are already there. All right. Immediately price got here, he activated those orders that are here. Because of the volume, you see the sharp rejection from here, a sharp rejection. The price started going back. Immediately we saw this sharp rejection, we just thought, okay, buyers, they are still in the market, all right? Buyers are still in the market. That was how we took our position, and we are still in, all right, till now. Once price break this level now, be rest assured that it's going to get to it's going to create this push is going to give us another high. It's going to give us another price. All right. Maybe wondering why we don't even talk about negative 27. Negative 27 is just an extension for you to say, okay, that is where usually we use negative 27.0 to set a target level, or negative 61.8 as well. All right. So, but it's not important. All right. So you just forget about this negative 27. As a trader, you always target reversal point. And where's the reversal point? Always at a resistance, because if you're in a bullish market, always target resistance. Let's say, for example, when price pull back to this point, as it's going back up, you target this level, the previous high. This is the resistance. Because once the idea as the price is going up, all right, is going to give us another high price that is higher. But you should not be targeting this. You should target this, because this price is already established, and as price is going again higher, is going to uh, take this level, because this level is regarded as a buy side liquidity. All right, a buy side liquidity. So as it's pushing, it's going to violate this level and to give us uh, a new price. So that is how it is. So instead of you to just wait and just be there, target this, because you know as it's going, the aim is to violate this level. All right? For you not to even struggle at all. Now, this one that is pushing up, this is the target here. This is the target. All right? This is the target. Okay. So that is just how it is. As it's coming down, any of these horizontal line, this one that we have already treated, once this one did not hold, let's say for example, this one did not hold and price keep pushing, this is the golden level 61.8. It should hold because this is most watch. If it happens that price push below it, this one will give us a very sharp reversal. And at the end of the day, if this one did not still hold, price will start pushing to this level. That means the whole price that went from this level to this level, it now reverse back to the same point. And when that happens, there is every likelihood that price will break this level. And once price violates this support level, it's going to give us, once it violates this support level, if you push below it, automatically it has given us what we call market shift. And now we need to change our bias, because anywhere from that point, price will just pull back, create a resistance, then start pushing to the downside. So that is how it is, guys. This is how to use your Fibonacci retracement tool. Let's try it on where there is a bearish move, so that you guys will understand what we are doing. Here we have a bearish move. That's what I want to do. We have a bearish move. Let's see if we can scale down to, okay. At this point where there's a bearish move like this, from this point to this point is a bearish move. All right, it's a bearish move. So in this kind of a situation, when you want to plot, all right, if you want to plot your Fibonacci retracement tool, you now start from this point to this point. All right, this is the price point where this move originated from, and the price got to this point before pushing back to the upside, creating a resistance. And where did he found support? Where did he found resistance? He found resistance at what? 50%. You see? After that, you now see the full movement to this side. All right. So before you can plot your Fibonacci retracement tool, you must look for where the price started from, the origin of that move. You see, the origin of that move. Before price got to this level, if first of all price moved from here to this point, then he now start retracing to create a resistance. After this resistance, you see this move before it drops. So that is how it is, guys. So don't forget, before you can plot your Fibonacci retracement tool, you need price range. All right? You need a price range where the price originated from and a reversal point, the new price, before price starts retracement. All right? So that is how it is, guys. It's very simple. All you need to do is just practice it. Once you practice, you'll be perfect and everything will just be fine. So that being said, thank you so much, guys. Remember to subscribe to my YouTube channel. Please subscribe to my YouTube channel. Apart from that, activate the bell sign so as once a new video is released, you'll be the first to be notified. On this note, I say thank you so much. I see you again on the other episode. Bye for now.